This video is going to take a look at adjustments that require you to account for corporation tax. So corporation tax is a tax on a company's profits, so it doesn't appear in sole trader questions, so it's just going to appear in company accounts and manufacturing accounts if it does appear at all, that is. So you'll be told that corporation tax of a certain amount should be provided for. So when we see the words provide for or provision should be made for, we need to think of the balance sheet. So the corporation tax needs to be paid for the year, hasn't been provided for yet, so that just means it hasn't been paid yet. Okay, so that means then you're going to have to put that into the creditors' amounts falling due within 1 year in the balance sheet. And it doesn't matter what type of account you're preparing there, a company or a sole trader. Okay, so that's that. So in a company account, imagine you were told that corporation tax of 30,000 should be provided for. So you'll take the 30,000 away there, and just to remind you that this layout is very, very, very important. It's so important that you get this layout correct. If you don't get it correct, you could have penalties. Okay, so it could be marks there that will be taken away from you because of that. Now, in the creditors minus 1 year, then you will have corporation tax due 30,000 because that has not been paid for yet. So that's how that's going to look, and it would be the same in the manufacturing account. All right, so let's look at some past exam corporation tax adjustments. So very, very, very easy. You just need to know the layout, and you need to know to put it in creditors minus 1 year. So 2011 manufacturing account, it was note 9 part 2. The directors are proposing that corporation tax of 24,000 be provided for. So you've got corporation tax there minus 24,000, and in the creditors corporation tax due 24,000. In 2009 it says note 9 part 2, the directors are proposing that corporation tax of 8,000 be provided for. So again, in the trading profit and loss, less corporation tax, you've got minus 8,000 there, and in the creditors amounts falling due within 1 year, you've got corporation tax due there, €8,000. In 2005 you've got note 7 part D, the directors are proposing that corporation tax of 10,000 be provided for. So again, in the bottom of the TPL, in less corporation tax, €10,000 there, and then you've got creditors minus 1 year, corporation tax due. And that's basically it. Just a reminder, it's so important to get from the operating profit downwards correct. So that is really important there. And that is the corporation tax due adjustment.